Hi students, today I am continuing with activity ratio. In activity ratio, the last one is working capital turnover ratio. In working capital turnover ratio, the formula revenue from operation. Revenue from operation is equal to net sales. Net sales is equal to cash sales plus credit sales minus sales return. That is revenue from operation. Revenue from operation you are dividing with working capital. The formula of working capital we already discussed. Working capital is equal to current asset minus current liabilities. Okay, what is the significance of this ratio? How working capital is used to earn revenue. How working capital is used to earn revenue. High ratio indicate better position. Okay, see, next one is profitability ratio. In profitability ratio, the ratio you are expressing in terms of percentage. All the profitability ratios are expressing in terms of percentage. That's why you are multiplying with 100. All ratio you are multiplying with 100. First one is gross profit ratio. Gross profit ratio, which shows the efficiency in terms of production or sales. Okay, so gross profit divided by revenue from operation into 100. Gross profit divided by revenue from operation into 100. You know the formula to find out gross profit. Gross profit is equal to net sales minus cost of goods sold. Net sales minus cost of goods sold. Then revenue from operation is equal to net sales. Okay, the available profit, gross profit only. You are not taking net profit, only the gross profit. Here you should know the formula to find out cost of goods sold also. Cost of goods sold or cost of revenue from operation. Here cost of revenue from operation is equal to opening inventory plus net purchases plus direct expenses minus closing inventory. That is already we discussed in the previous part. So I am not going to calculation of cost of goods sold. You know how to calculate it. Just understand the formula: gross profit divided by revenue from operation into 100. Okay, next one, operating ratio. Operating ratio. Operating ratio is equal to, remember, cost of goods sold. That is cost of revenue from operation or cost of goods sold plus operating expenses divided by revenue from operation into 100. Cost of goods sold plus operating expense divided by revenue from operation into 100. You know what is cost of goods sold. You know what is revenue from operation. Only question is how to calculate the operating expense. Operating cost or operating expense is equal to, which contains office and administrative expenses, selling and distribution expenses, employee benefit expenses, and depreciation and amortization expenses. This all comes under operating cost. This all comes under operating cost or operating expense. So office and administrative expenses, selling and distribution expenses, employee benefit expenses, depreciation and amortization expenses. Okay, then next one is operating profit ratio. Operating profit ratio. This is only operating expense. This is operating profit. Operating profit divided by revenue from operation into 100. Then there is a question how to find the operating profit. Operating profit is equal to gross profit plus other operating income. Only operating income minus other operating expenses. Other operating expenses is equal to operating profit. Operating profit divided by revenue from operation into 100 will give you the operating profit ratio, operating efficiency of the firm. Right, then net profit ratio. This is very important. Net profit ratio, which shows the overall efficiency of the business. Overall efficiency of the business. See here how to calculate the net profit. You know the formula to calculate net profit. Before finding the net profit, you have to deduct all kind of expenses and you have to add all kind of incomes. To the gross profit, you have to add all kind of expenses. Operating expenses and non-operating expenses you have to deduct, and non-operating income and other incomes also you have to add, then after balancing you will get net profit. That net profit you are after tax, after providing tax also, net profit you have to find after providing tax. After providing tax, you are taking the net profit that you are dividing with the revenue from operation, which is equal to net sales. You are multiplying with 100, you are getting net profit ratio. You are getting net profit ratio. Then last one in this profitability ratio is what? Return on investment or return on capital employed. Return on investment or return on capital employed is equal to net profit before interest, dividend and tax. Okay, see, if any net profit is available, before finding the net profit you will provide interest. Okay, you will provide interest. After providing the interest you will provide tax. Then after providing the tax, the available profit you will divide among the shareholders in terms of dividend. So before providing dividend, tax and interest, how much profit is available, that you are dividing with the capital employed, you are multiplying with 100, then you are getting return on capital employed. How much return you are getting? High ratio indicate good position actually. It is also showing the overall efficiency of the enterprise. Overall efficiency of the enterprise. So this is all are the ratios comes under profitability ratio. Gross profit ratio is there, operating ratio is there, operating profit ratio is there, net profit ratio is there, return on investment or return on capital employed ratio is also there. Let's do one example. Calculate the following ratio from the given information: operating ratio, gross profit ratio and net profit ratio. The informations are given: revenue from operation 1,20,000, operating expenses 4,000, gross profit 25% on cost. Cost means cost of goods sold. Non-operating income 20,000. This is given. From the given information, you have to find operating ratio, gross profit ratio and net profit ratio. First one, operating ratio. What is the formula to find operating ratio? Operating ratio is equal to cost of goods sold plus operating cost. Cost of goods sold plus operating cost divided by revenue from operation into 100. The information is available. Revenue from operation is available 1,20,000. But cost of goods sold is not there. Operating cost is also given, operating expense. Okay, then what we will do? Okay, but one information is there: gross profit is 25% on cost. Gross profit is 25% on cost. We know the formula: gross profit is equal to net sales minus cost of goods sold. As per the given question, gross profit is 25%, on cost is 100% because it is given on the basis of cost. If cost is 100%, then gross profit will be 25%, then net sales will be 125. 125 minus 100 will be only 25. From this, any value is given. Net sales or cost of goods sold or gross profit, any value is given. Net sales is given, that is equal to revenue from operation, which is given. Revenue from operation is given 1,20,000. 1,20,000 is given. So 1,20,000, if the given value is 125%, then gross profit will be 25%. You are multiplying with 25, then you are getting 24,000. What is 25%? If the given value is 125%, then your gross profit will be 25%. Then the gross profit is 24,000. Gross profit is 24,000. And also from this, cost of goods sold, if the given value, that is 1,20,000, is equal to 125%, then your cost of goods sold will be 100%. Multiplying with 100%, you are getting 96,000. 96,000. So cost of goods sold is equal to 96,000. Okay, then how to find a cost of goods sold? Cost of goods sold is equal to, it is there, 96,000 we found. Then you are adding operating cost. Okay, this is operating cost. Okay, operating cost. Operating cost is 4,000. Then cost of goods sold plus operating cost. Operating cost is 4,000. That is 96 plus 4. Okay, 1 lakh. 1 lakh divided by 1,20,000 into 100. The answer will be 83.33%. Okay, next one is what? Gross profit ratio. How to find the gross profit ratio? Gross profit is equal to gross profit ratio is equal to gross profit divided by revenue from operation into 100. Gross profit is given. Yes, we found the gross profit 24,000. 24,000 you are dividing with revenue from operation into 100, you are getting 20%. So it is direct. You can just put the values in the formula. You will get the answer. Okay, next one, net profit ratio. Net profit ratio. Net profit ratio is equal to net profit after tax divided by revenue from operation into 100. Net profit is available? No. We know the gross profit. To the gross profit, you are deducting all other operating costs and you are adding all other non-operating incomes also. Then you are getting net profit. To the gross profit, operating cost you are deducting, operating incomes you are adding, you are getting net profit. From the given information you can do that. Okay, then you are dividing with the revenue from operation. Revenue from operation directly given in the question, that is 1,20,000. When you are doing this, you are getting 30%, which means your net profit is 30% on your sales. If sales is this much, on this 30% is your net profit. Okay, if net profit percentage is increasing, it's good. Actually, it is showing the overall efficiency of the firm. It is just an example. We will do more examples in our online session. So keep the formula, write the formula and understand the formula and understand the significance as well. Okay.
Bright Education Center, Medical and Engineering Entrance Coaching Center, Hilal area, Doha, Qatar. For further enquiries, contact 306000679.